So all-time highs on top of all-time highs are always going to be exciting, but some out there saying, this is just the start. Well, we just saw gold push past $2,200. It's kind of a big deal. The rally that kicked off in December just hasn't let off. And you can cite other assets taking off on steeper curves, but for a stable asset like gold, this has really been quite a clip. And if you aren't impressed, maybe you should be. Now let's stop and think about what's actually happening for a minute. Gold was $1,270 5 years ago today. That's a 73% gain. So I get it. Risk assets like Bitcoin, Nvidia, Eli Lilly stock, they've been on a tear, but gold is not a risk asset. It's the thing you park your money in to be safe with slow growth. But it's almost getting hard to see it that way. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So we're always going to hear about some speculative asset that's outperforming gold, and that's one part completely irrelevant, and then one part interesting that people would put it in that category to begin with. But if we just dial in on what gold has been up to this month, we're looking at 5 record highs this month alone. Yesterday it hit 22.12 or 22.25 if you're looking at futures. So if you're not at least a little bit impressed by this, well, your expectations are probably off. Now, what kicked off yesterday's push above $2,200 was really just a few words from the Fed. We got confirmation we'd be seeing 3 rate cuts yet this year. And like always, it's data dependent, but that would bring the Fed fund rate down 0.75% in 2024. So these all-time highs are definitely interesting, but the other thing to mention here is the overall sentiment. I mean, the mood is bullish, and I don't think that we can overstate that. The CME FedWatch tool tells us right now that traders are pricing in a 70% chance the Fed will cut in June, and that's just one part of this. Now, some of this is going to be on a dip in the US dollar. I mean, that's just how it goes. We know by now that the lower the interest rate, the lower the treasury yields, the lower the opportunity cost on gold. So US dollar goes down, gold goes up. The disparity here, though, is that we're seeing modest drops in the dollar, but we're seeing big jumps in gold. Now, a lot of this analysis can be pretty boring, at least it is for me. All-time highs, maybe those are boring for you too. That all depends on expectations, I suppose. But sometimes I would just like to come on here, cut right past the analysis and just say, hey, gold is up. Maybe show a little bit of it, cover the plan, and then shut that whole thing down. But the biggest thing to consider is the part that none of us know, and that's what gold is going to do moving forward. So I do think it's important to know what's causing the current price movement, because that helps give us an idea of what's coming. And really, that's just guesswork, shaking up the magic 8 ball, seeing what it has to say. But it's hard not to at least assume that what we're seeing right now is just the beginning. Now, where do we go from here? $2,300, that's a number that I've used before. That's not that far off. Now, I was talking about that in October or November of last year, but I was using that as something that I thought we could get to by the end of the year. And let's just be realistic. I was also giving a plus or minus there. Maybe it's 2,300, maybe it's 2,100. Well, 2,100 is in the rear view. Look at us giving future numbers here. I mean, what do we know? We're no analysts. So what do the analysts think? Well, analysts are puzzled. That's a word that keeps coming up. It's just one more data point what the analysts are thinking. But if they're puzzled by the current move, that should probably temper our expectations a little bit. So this 5-year curve from $1,300 to $2,200 that we've seen so far in gold price, maybe we shouldn't plan on that trajectory to continue. But then again, if we're all puzzled, who knows? So here's a conservative look. Yesterday's trading was thin. That price movement probably got a little bit overheated. Now, it wasn't based on central bank buying or some billionaire whales coming in or anything mysterious, really. We just saw comments supporting rate cuts, and we saw a bump in gold price. So nothing mysterious there. I would rather look at large analyst comments for price predictions, so what we're going to see going forward. And $2,300 has been given by quite a few of these analysts, by Citi, by UBS, quite a few others. Now, I would say that works pretty well as a prediction. Mine personally would be a little bit higher than that, but I don't have any kind of analyst title to back that up. So a quick word on central banks, because I think this is why it's all been so puzzling. The World Gold Council is telling us central banks are still strong buyers of gold in 2024. Now, we don't have figures yet, but we know the past 2 years have been historically high. And if that's driving prices, how do you plan around that? Well, you don't. I mean, China is the largest gold buyer in 2023, and there's this idea that Russia and China are working toward a gold-backed currency, but it's important to know this is only a rumor, nothing more. People are saying it's happening, it's not. But the motive behind holding gold as an alternative to dollars should be pretty clear. Poland was the second largest buyer of gold last year. That might surprise you. They're buying because of the shit show happening next door. You can't choose your neighbors and all that. Russia, though, would be a really tough one. Well, next up is Singapore. It's really a strange case here of a lot of different central banks buying for a lot of different reasons. We can guess at Singapore as well, but this is really a case where none of us mere mortals are ever going to have any indication what's driving central banks to do what they're doing. At least not on any grand scale, and that's what makes all of this so hard to predict. The takeaway I would say is that gold has a lot of room to move, in both directions really, but we know the surface level catalyst right now is the Fed rate policy. That's for the price volatility at least. Below all of that, central bank buying, historic highs. Retail buying is also high, particularly in China, India, and Turkey. So I think it's fair to say we're going to continue to see strong moves in gold. Now, all-time highs, kind of exciting. So are the dips. So it's going to be a very interesting year for gold. Let's call it good there. Let us know how you're celebrating record high prices. Are you buying or selling, God forbid? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.